This is your LMAX exchange technical update for Thursday, September 28th, 2017. Euro dollar. So the euro, since breaking down below a neckline of a head and shoulders top, and the 50-day moving average is now focused on a measured move downside extension to 115.55, which also happens to coincide with the 100-day moving average. And so this should be where the euro looks to test over the coming sessions as the market comes under a bit of pressure and enters a period of correction in 2017. Ultimately, the market is expected to find good support down into the 115s given the intense uptrend, but over the coming sessions there is risk for a deeper pullback into the 115s. Sterling dollar. So cable has seen a drop after putting in a 2017 high up in the 136s. The recent breakdown below 134.50 does suggest that this market could see additional weakness over the coming days back towards the 132.68 previous resistance, now turned support. That previous August peak, which then could act as a level or an area for a higher low and continuation of what is a more meaningful uptrend in this market. Dollar yen. Dollar yen has broken out in the recent trade, breaking back above 111, with the focus now on potentially seeing an eventual push up towards the range highs from this year up in the 114s. Overall, this market has been confined to a range trade despite breaking down to a fresh 2017 low in the lower 107s several days back. The market hasn't been able to really establish any break of the range, and so we're confined to this range trade with a rally up towards the range highs seen potentially well capped again in favor of another topside failure. Euro Swiss. Euro Swiss has recently stalled out by a 2017 high just over 116, but the setback is viewed as corrective and the market is eventually seen higher with this as a bullish consolidation up towards that next key major barrier at 120 further up. Aussie dollar. So Aussie is now considering the possibility of establishing back below 78.08, which is a key support level from August 15th. A break below that level would open the door for deeper setbacks and take the more immediate pressure off the top side. Dollar CAD. Dollar CAD has entered a minor correction over the past several sessions, but there is risk for continued upside here if the market can establish back above next key resistance around the 2500 area, which would then expose 2780 further up. Kiwi dollar. The New Zealand dollar has seen setbacks and being very well capped into rallies since topping out by a 2017 high above 75 back in July. A breakdown below 71.32 would set the stage for a more accelerated decline back towards the 2017 lows down in the 68s. SPX 500. The S&P 500 is continuing to consolidate just off record highs with dips very limited and very shallow in favor of what could be a continuation of this record run up towards the next key objective here in the 2550 to 2600 area. It would take here a break at a minimum back below 2446 about to take the immediate pressure off the top side, while a breakdown below 2417 and even 2400 would be required for a bearish structural shift. Gold. So gold has seen a period of weakness over the past several days since topping out by a 2017 high above 1300 at 1357 about, but the market has been very constructive over the past several months, well supported on dips, and so this latest round of setbacks could be supported yet again in favor of the next major upside extension and continue of gains to a fresh 2017 high beyond that 2016 peak at 1375 further up.